Good evening. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, and we are on Veterans Day, November 11th, 2020, time 6:40 p.m. Central Time. You know, this was Armistice Day from World War I, and then over the years, I don't even remember when they decided to make it Veterans Day, but it's the right thing. It's for all of our Army vets. Let's go back to the beginning of our country. I am fortunate in that I have a nephew that serves in the Army right now, another one in the Air Force. My niece was in the Army as well, and these are younger people, I want to tell you that. And I thank them. My one nephew has a job that one day when he's out of this job, I'll be able to share things with you that are mind-boggling and you'll get a kick out of it, but can't do it right now. Okay, so as we take a look at what is going on here, I'm looking for consolidation. Markets don't go like they've done on these run-ups without getting some consolidation. Another thing that bothers me, this COVID-19 isn't getting enough play. Do you have any idea, if you're watching your local news, how severe it is in your community? It's everywhere. And it's going to task the hospitals to the point where they're at the breaking point. They're going to be bigger. We're already beyond what we had in Illinois. So now they're already, I just saw the other day, they're taking some of the big hospitals here, Rush and the other, and where you would come in, now they're triage centers. This is really serious. We had 145 deaths here. We have a positivity rate approaching 13% in Illinois. The governor today asked people to voluntarily stay in their homes, work from home for the next 3 weeks. Will they? I don't know. If you don't do it voluntarily, you know what happens next. It's the shutdowns. The first thing that'll happen with our mayors. Why are all these people gathering in parks? Are there going to be gatherings of people? They're not going to allow it. The weather change helps in the Midwest because it keeps people indoors instead of outdoors. That is the good news. The bad news is where we're at. And one other piece before I get going. Read about COVID-19 that Pfizer's got. If you're a rich country like America, Europe, you're fine. In other words, it'll get distributed, but it's got to be kept at 70 below zero. When it's going to be distributed, it's got to be kept at a very low temperature for 5 days. It's got to be used. Well, how do you do that in India? How are you going to do that in Mexico? How are you going to do that in South America, Central America? You're not. They don't have the infrastructure. That's the problem. Moderna, they're talking 2.5 weeks out before we hear a test result. Will it be the same type of event? I don't know. Everybody's going to be asking it. That's why I think that even with the euphoria, you got to tame things back. I think the market is beyond a President Trump win. I think it's accepted fully, the Biden win. Could there be a surprise? There could always be a chance, but I wouldn't count on it. When we look at the S&P, we're up 69 points for the week. You know, there's an inversion. You're down nearly $100 an ounce in gold, and here you are up 69 points in this market. You're not up to the spike high you made 3 days ago. Remember, we're already open tonight, so you're seeing where we're at. The pattern is still bullish. You have a clean pattern of higher lows and higher highs. No question. What would break the pattern? Well, the numbers jumped today. Now it's 3506.50. So should the market get under that, and that's 65 points away roughly, that would give you a bearish wave. Why a bearish wave? Because unless you'd get up over this high, you'd have lower highs and a lower low. I didn't say the trend is down, the trend is confirmed. I said you'd have a bearish wave with the swing line down. That would turn that part. What else? The 18-day average is well below that at 34.28, let's call it, 34.28. So even if you get there, you got to fall another 70 some odd points to get to that number. That's why I said you could turn the swing line down, but I don't have confirmation you'd turn bearish. Got it? That's why I'm thinking now you're getting to the point where consolidation is probably the right word. The market's gone up to the Bollinger Band. It gave you one shot to come out of it, and you haven't been rewarded if you didn't do that, and you're staying overbought. Overbought is not embedded. Embedded occurs when the market sees both numbers of the slow stochastic go over 80 and stay there, and it's often, it is not always, often, you'll see yourself do the work. When I say often, a high probability, accompanied by a move higher. Now, the degrees of higher can vary, but it's often accompanied by that. That's lost. When you lose the embedded reading, like you did right here, prices quickly retreat, and you'll hear me talk about that as to where. There's another way to figure that out, or have an idea where you think it's going. Maybe that's the right grammar. So I see a market that's in an uptrend, has hit an upside target, that is overbought, and it will take very little if the market wants to correct and maybe make a run back to the 18-day average. Who's in control? The bulls, but it is bullish in terms of, it is bullish but overbought. NASDAQ, you're nowhere. You got a higher high, lower low. This is what I'm hoping to see in the S&P. It went there, and it's just sort of hanging around that zone. Momentum has gone flat, no trend. The Dow is still the market that's seeing a certain amount of rotation. Now, today we saw the NASDAQ say to itself, well, maybe there's too much that the market's rotated and it's time to come back. You do have an uptrend now with higher lows and higher highs. What breaks the trend? Breaking the trend would happen on a move under 28,781. That could give you lower highs and a lower low. You would need a close under 27,915 to confirm the bearishness, so I can see a neutral move if that occurs. Is there a reason that I think new money is going to be buying right here? No. I see an overbought market, not even trying yet to get both numbers of the slow stochastic over 80, let alone for several days. The Russell, same thing. It is running the Bollinger Band. It had its one big peak. Now, the difference here is the market has worked its way higher. So what does that mean to me? It means that these small caps are where the bigger rotation is going on. I mean, just look what each index does. We know the tech did its job for 9 months. Then we heard, oh, let's go to the big money in the Dow. But very quietly, this market has been acting very, very well. I'm surprised we don't hear more about that. What puts this market neutral is getting back under the 1693 level. Anything under that does it. In the VIX, I'll go out on a limb again. I love doing it. If this market hits the lower Bollinger Band, which is right now 2074, it'll probably drop tomorrow. Might go down to the 2050s. But if it hits that, I look for the put writers to step in, looking to see if they can catch a move back to the 100-day average. In the past, when you've done that, you've done a pretty good job of getting to the closest moving average in fairly short order. Playing it the other way, I don't recommend. In other words, don't write calls. This market can surprise you at any point in time. It's the puts that the market is saying, okay, it's a bit, if for whatever reason, it's been a bit more reliable. Is that a better word? In the T-bond market, we're running the lower Bollinger Band in an oversold condition. Okay, that's not reason enough for new money, in my opinion, to be pushing on this very hard. Oversold is oversold. You know, if you build an algorithm, what is an algorithm? It's all your thoughts in a market. It's all these little things. Maybe you have teams of traders. Guy found this, I found this, you found that. You put it into the system, and the system gives it a hierarchy. Think about that. Makes its trades based on it in some way. I'm giving you the big overview because that's basically what it is. Well, one of those is the market oversold or not? Where's that fit into the hierarchy? They could have other things that override that. I would think so. I'm not interested as a trader in selling into oversold conditions ever against the Bollinger Band. Let me make that word to you very clear. EVER, ever. It's not a reason to go long. It's a reason not to put new money to work on the bear side. Difference. In the dollar index, you're neutral. You've got a market that's got a pattern of a higher high, a lower low. You have nothing here. You're fighting a battle right where you should. Right what I teach in my charting course. What do I call the line in the sand? I call it the 18-day average of closes. That is finally what you got up to. This is what you looked like coming in. And when it hit it, I have a bell. I rang it and I go, yeah, that's just what I wanted to see out of the market. Sort of what the palladium did today, getting back to its 18-day average of closes. You look for markets to get back to a zone where they'll say, okay, I'm not excessive on the upside or downside. What next? That's what I think. Eurocurrency, we have a lower low, higher high. That's not a trend. Market's fighting at the 18-day average of closes. Momentum had gotten overbought. It's working itself down. You're waiting for trends to set in the dollar and the euro currency. The yen's in a downtrend, but it's oversold. Its targets are right here. Does it have enough power to reach them? The combination, I think, of the 100-day and the lower Bollinger Band is going to attract an awful lot of short covering. Bitcoin, until you lose the embedded reading, I am bullish. The target's still the potential for the upper Bollinger Band. The pros will be moving their stops up, and I think watching moves there. WTI and Brent. Well, the differential's been favoring the Brent. As long as you're over the 18-day moving average, you hear me say that. And that's been what's going on. You came down, you checked it out a couple of days ago. It still favors the Brent. But as far as I'm concerned, today was cash-in day. It's first challenge of the upper Bollinger Band. What do I teach you here? What do I teach in my charting course? First time you hit it, so long, folks. Been fun to be with you. So long, folks, in the WTI. Catch you on another trip. That's basically what I say. I said the same thing when you hit the heating oil up there. Hasn't rewarded very much, but I believe it's still the right move. Natural gas. Okay. You refused to embed. That tells me you have an oversold market, battleground. What did I say yesterday? I thought that if the market rallied through here, 100-day average would be the first resistance point for the battleground. I'm sticking with it. If you can clear that, the question is, can you clear this number to get back to the 327 level? Don't know. Winter's coming, oversold market, big price drop. Come on. I got my heat on here. I woke up this morning in the 30s. We were in 70-degree weather 7 days in a row in Chicago, ending yesterday. The storm was massive that came through the city. I woke up this morning and I'm ready to go. I didn't need my alarm. I go in my house. I have no electricity. So I was late on everything. I guess something hit in our neighborhood. It wasn't the whole city. And I didn't have any. But it came out about 8 o'clock. I couldn't obviously put out anything for my subscribers. How? I didn't have electricity. So you wait. It's one thing when I don't have internet, I can use a hotspot. Without electricity, no. And I'm right in the center of the city. In any case, I'm Ira Epstein. I want to remind you that we've got our special report on the metals. It only stays up 3 days, folks. That's my policy. So it's not something, I want to go see what Ira wrote a week ago. I want you to look at it now. Is it timely for now? Why do you think I put on monthly, weekly, daily charts? Seasonals that I talk about where we're at now. I'm not trying to give you this to go back and do your research. Oh, look it, he was right back then. I want to be right or wrong now by what you think. So how do you view this? It's so simple. Go to our website. Under the word research on the top, it's there. Take a look. It covers SLV for you ETF traders, and it covers the silver for the futures traders. I'm Ira. Have a great day.